So I am Catherine Durand. I am an economist with Agrimark Dairy Cooperative, which I am sure you are all very familiar with. I'm going to give you an update today on really where the dairy markets are currently, where we kind of expect they may go, though frankly it's very difficult to predict where anything is going these days. And I will touch on some of the reactions that we're seeing from the federal government as well as state governments as well. So, to begin, I think it's important to just recognize that going into this pandemic, the dairy industry was finally in a position where we were really well positioned. Okay, so we had, several, you all know the 5 years of low milk prices. We had several fundamental market challenges that really kept us from having that recovery that we would traditionally see on a every 3-year cycle. And by the time end of 2019 came, we were very much getting out of those issues. A lot of those things were resolving. And on top of that, the industry, I think for the first time, was taking some huge strides in terms of changing cooperative management and how cooperatives react to the marketplace. You all know it's very difficult to turn off a cow. It makes it so that, responding to market changes is just inherently difficult for dairy. It is always going to be the case. And with cooperatives being farmer owned and controlled, there's always going to be that challenge of what is good for the farmer, what is good for the cooperative. And so, going into 2020, several cooperatives around the nation, Agrimark included, were taking some really big strides to managing their internal inventory so much better. We put a base excess program into place at the beginning of this year. Everything was working exactly as we wanted to. The pandemic hits, and things just blew up in everyone's face. So, as you know, the issue that the pandemic has caused for us is really an enormous demand destruction. Essentially, all of food service has been all but eliminated. And, the backup of products, the causing, dumped milk, all of these things have all been because of that. And prices have plummeted in response. In the matter of about 3 weeks, dairy farmers lost about 30% of their gross annual revenue because of the losses that we're seeing. For our neck of the woods, at least for an Agrimark average farm, we're talking about 200,000 at least lost, essentially, within 2-3 weeks. It was really unbelievable, something we've never seen, and we couldn't see coming, which was, the most difficult part of it, not just for dairy, but for really everyone involved. So the response has been, I would say, really, really impressive. And I'm impressed at really every aspect of the supply chain and every aspect of government. I think people are showing how important this industry really is for our rural economies and really stepping up to the plate. So with Agrimark and a lot of dairy cooperatives, again, I talked about the inherent challenges to managing internal supplies. We took an even bigger step. We eliminated our base program that we put into effect in January, and we put a whole new program in place. And we are asking our members to cut production about 5%. Now, you've probably heard other folks that are doing similar things. DFA has asked their producers to cut 15%. That difference there really goes to what is your production capacity? So we at Agrimark are in a much different position than some of our other cooperative friends in terms of how much we put through our own plant. So we're a little more insulated in terms of that. I just think I'm so proud of our board and for their ability to say, you know what, I know this is going to take a hit on my farm, on all of my members' farms. We're going to lose people because it is so difficult to ask people to cut production like that, especially in times when your milk price is going down. But I think it just speaks volumes to what we are willing to do to keep ourselves afloat during this time. So I'm really proud of that. The federal response, I am also very impressed with. So we had the direct payments, the information on that come out this week. They were much better than I expected. So I'm really happy to see that. It's going to be about $6.20 per hundredweight paid on the time period that we're looking at payments. That is significant, but it is not going to make us whole. And so there's some things that we need to continue to push on that level, and we definitely will be doing that moving forward. Between what we saw come out of USDA this week and pairing that with what we see in the House bill, I think it sets a nice framework for us to build upon. And so right now our big push is going to be on the Senate side to build upon what they've put forward. And so I feel really good about where we're going from a federal perspective. As I said, the states have been incredible about picking up where the feds have left off. You know, states are understanding that the federal support is not going to be enough. And at least a lot of states in our neck of the woods, Vermont, New Hampshire, Connecticut, doing some great things to do some increased direct payments to their farms. That has been really wonderful. The other category that I would say has been surprising for me has been dairy product purchases. You know, traditionally speaking, or historically speaking, some of those dairy product purchases they're always important, but they don't necessarily move the needle on milk prices. And this time around, they are substantial enough that they are contributing to some of the positivity in the markets that we've been seeing in the last few weeks. And again, that's been mostly on the federal side of things, but I've been so happy to see states following their footsteps and doing the same thing with product purchases. And it's a wonderful thing to be able to support not only the farmers, but also our neighbors that need that food. And, you know, with the unemployment rate at the number we see right now, it is just so critical to do things along those lines. So I'm very pleased at what I see. Since the low that we had about 3 weeks ago, we've seen significant improvements in prices. And I would say that there's really 3 things contributing to it. It would be the product purchases, as I just mentioned, number 1. It would be number 2, some of the things we're seeing in terms of industry supply response. So the cooperative programs, things along those lines. You know, cutting back on milk production, things along those lines is definitely putting some positivity out there in the marketplace. And then, of course, the return of food service coming back. So, you know, just to give you a feel for where product prices were, think about cheese and butter as being the 2 main products that rely upon food service. We saw cheese prices at $1 a couple of weeks ago, and today we're sitting at about $1.95. Butter, as another example, was down about $1.10, now at $1.65. Now, that's not a great price historically, but I mean, these are huge, huge improvements. You know, there are things that indicate that those prices should have improved substantially. I think the bigger question right now is the improvements that we've seen in the last week. Will those stick? Was it a bit of a market overreaction? I'm not sure. You know, we're going to have to see how things play out. You know, we have some things on the supply side, such as high inventories. You know, what happens with milk production? Do people really cut back the way we've asked them to, or the way we think they're going to? That could all play into prices not going up or not staying as high as they are now. And then I would say the biggest question in my mind is, what on earth does the demand situation look like? You know, are we going to have a second round of the virus? Are we going to be back in this position come fall or the winter? You know, none of us know that right now, but I think that has the potential to really rattle us again. I will say, now that we've seen the industry respond in such a fast and effective way in terms of managing supplies and watching the market, and also seeing people along the food supply chain, such as restaurants, be so innovative in terms of takeout and things along those lines, I would expect that the impacts would not be as great if we have a second round of the virus, but still, that could potentially rattle us even more. And then just sort of more of the philosophical questions: what are consumers going to do? Or are you going to go back out to eat if it's open? You know, can people afford to go out to eat? How long you know, how big of a recession are we talking about? And similar on the international front, you know, exports are a huge part of dairy's portfolio right now. And some of our export players, such as Mexico, their economies are concerning. Also look to, you know, the Middle East and oil prices. And though we don't, send a huge amount of product over there. Some of our counterparts, like the European Union, do. And as their economies slip, now, the overall international demand situation is much different. So I know that was a lot. There's just a lot of things going on that we just don't know what's going to happen, things I'm concerned about, but also some good things overall. And again, so great to see that our federal government and that for all of you, our state government, stepping up and recognizing how important dairy is for your states, for your local communities, and ensuring that that product can make it into the hands of those who really need it. So thank you very much.
Thanks, Catherine. Thanks so much for joining us today. And I see that Dr. Goetz is on now with us. What I'd propose doing here is having all of our presentations made and then maybe saving our questions till the end to make sure that everybody gets a chance to speak. And so Dr. Goetz, I'll turn to you. We didn't really do introductions, but I will say that Stephan Goetz is a professor of agricultural and rural regional economics at Penn State University, as well as director of the Northeast Regional Center for Rural Development. And Tara is sharing your presentation now in front of us. So welcome, Dr. Goetz. We really appreciate you spending time with us today.
Yeah, thank you very much. And sorry that I was late getting on. And actually, I can control it. I have my screen share open, Tara, if you want to give me back control. Is that all right? Might just be easier then. Sorry about that.
Tara, you're muted, so.
I think she's got it. Yep. Okay, great. Thank you. So hi, everybody. And sorry that I'm on late. Host, okay, disabled. Okay, I don't have the screen sharing. Could you give me a screen?
I think you need to be a co-host to share the screen.
Oh, I thought you could give me access.
She may be able to, but that's beyond my pay grade.
Okay, here we go. I think it's working. Let's find the right show here. Good, okay. Huh. It won't let me do it apparently. Sorry about that. That's, I don't know what's going on.
Tara, do you want to put it up there? And then Dr. Goetz, you could instruct Tara as to how to drive here.
Let's do that, yeah. Again, all right, so yeah, my name is Stephan Goetz. I'm at Penn State University, and thank you for inviting me to present some of our ongoing research here. And I apologize in advance. I don't have data for Canada, which would be fascinating to look at as well as for Puerto Rico and the Virgin Islands, which I know are in your region. But this is basically our the area we work in, but we also added Ohio and Virginia in some of these. So if you could please make it a full screen and then also advance to the next slide, Tara, thank you. Thanks. So a quick overview, just want to give you a quick look at the trends and fatalities and also in cases, just in cases across the region. Could you make it a full screen? I think it'll be easier to see then. Oh, is it not working?
Tara, can you just at least advance it?
Yeah, if we're not advancing would be good too. So just a quick overview. As I said, I'll show you the trend in cases in rural and metro areas. Are you able to advance it? Or is it back on mine? No, I can't hear you. If there's anything I need to do on my end.
Yeah, you're muted, Tara.
All right, so I think you can see the graphs in the thumbnail, but okay, great, thanks. So trends in cases, fatalities, and short-term economic fallout. Thank you. Agriculture, some initial results on ag and food processing, and we're very concerned about supply chain issues that I think were discussed just now, and then point you to a few resources that we have compiled and our colleagues in the other rural development centers. Okay, if you could advance to the next one, please. So this chart shows the evolution in the cases since the beginning of the pandemic. Great, so the top one is metro areas and the next two are urban. These are successively more rural counties, and This is a trend in cases with a 3-day moving average. But basically, we're breaking out metro and non-metro areas. If you can see the map in the upper right-hand corner of your screen, I have to minimize my my screen here. So if you can look at the map there, you can see that there are counties. The green ones are basically the metropolitan ones. They're all lumped together in the top line. Then the next 3 down are non-metro areas with successively smaller populations. Okay, so you can see that in the chart there, I hope. It's 20,000 and more, 2,500 to 19,999, and less than 2,500 or completely rural. And we also distinguish here between adjacent and non-adjacent counties. So 4, 6, and 8 are all adjacent to metro areas. And the idea here is that you get more of a spread if you're closer to a metro area, because people are either commuting in for work or they're going in for services, medical care, and so forth. But basically the trends are similar. And the good news, if there is one here, is that the lines are bending down. All right, they're all coming in the right direction. And you can see they bounce around a lot from day to day, but the overall trend is that of a curve that is not just flattening, but it's coming down in terms of these case numbers. All right, can we go to the next one, please? And these are the fatalities. So if you've heard about the ratio, about 5% of the confirmed cases end up being fatal. And the data have problems, of course, because not everybody who has the disease is tested, and not everybody shows symptoms, as you know. So the data have to be viewed with caution. But what we do see here is that by and large, the fatality rates in rural areas are lower than in metro areas. So in a way, that's good news, because we've been warned all along that because of the demographics of rural areas, elderly population, less access to healthcare and so forth, that we would have more fatalities there. But at least so far, the rate has not been worse. So, and could you advance, please, Tara? So this first map is from tracktherecovery.org, and I encourage you, if you haven't seen this, to look at this, because you can pull up data for your own states, at least in the US. And what this shows is the initial decline in consumer spending. The more red, the more the drop in consumer spending. And these numbers are staggering, because the dark red means that spending has been cut in half. So you see parts of Pennsylvania, upper Vermont, New Hampshire, parts of upstate New York, but also Indiana, which I know is outside our region. But you can see there have been tremendous reductions in consumer spending in the short term. And in Pennsylvania, at least, these are also highly rural areas. And the yellow shading means that there's been less of a decline. But clearly, there's been a tremendous shock to the economy. Could you please advance one more? Thanks. And then this is the percent change in hourly employees in small businesses. And here you can click on your state to show, yes, you can do this by county also. If you click on the state, you can do it by county, so you can look at rural versus urban differently. But these lines here show, for example, the grayish one is the US, and then it shows a 44.1% decline in businesses shutting, or businesses closures, as of May 15th. And then the red line is Pennsylvania, New York, and then District of Columbia, which I just put in as examples. But this is obviously a tremendous shock to the economy. It's nothing like we've ever seen before. And you can trace this through for each of your own states. All right, could you please advance one more? And now this graphic I put in here because to show you why there's been such a shock to the food system. Because if you look at where consumers spend their money, the red line at the top is grocery stores. So this is where we, our Kroger's and Giant stores and what have you, where we go pick up our groceries. And you add that together with the purple line down below, a little further below, that's warehouse clubs and the like, grocery super centers like Walmarts and so forth. That's the bulk of most of the consumer spending. But more than half, more than we spend in grocery stores and at the super centers, we spend even more at full and limited service restaurants. Those are the greenish lines and the bluish lines. So if you add those two together, you end up with a number that's even higher than what we spend in grocery stores. So the bottom line is that Americans spend more of their income for food in restaurants than they do in grocery stores. So you can imagine when those restaurants shut down, that had a tremendous backward effect on the economy. Also notable here is the pinkish line towards the bottom, that's schools and colleges. Obviously, we don't have school lunch programs anymore because they've been shut down. The direct or the mail order and home delivery, the brownish line at the bottom, that likely has increased dramatically since the pandemic, just because people are ordering at home. And then you also have the direct selling, which was amazing to me, but the direct selling of food from farm fields to consumers is very small at the bottom. You can see it's the orange line. So this is also picked up recently because people are trying to buy more at farmers markets. So thank you. If you could advance one more, please. Then what we've also done, we started to do a trend analysis in Google to see what is preoccupying consumers at this time. What are they looking for when they go online to search? And it's interesting to see how the search patterns have evolved as the pandemic progressed. So back on January 21, we had our first US case. On February 26th, you see we had our first US local transmission, that's the gray line. But on the week of February 16 to 22, you see the biggest, the searches for canned food started to take off as people started to worry about storing food. Right? We had the lockdown coming, people were worried about the food system not keeping up with demand. So they were looking for storables. They were looking also for bread, flour, and rice and beans and those kinds of things. But canned food was sort of symptomatic. You advance it, fast forward 2 weeks later, March 1 to 7, the switch, people started to look for grocery stores or food banks as search terms. So clearly people were starting to get laid off. They were worried about accessing food somehow. So food pantries people were searching for, but also just grocery stores, maybe in terms of opening hours. But clearly what was preoccupying the average consumer changed. And then another week, fast forward another week, you see that curbside delivery, those kinds of things took off. As the lockdowns and the shutdowns started to take hold, they started to look for these kinds of topics. And that's held up pretty well, by the way. You can see people are still looking for takeout, whereas the other search interests have fallen off. Thank you. Okay, if you could have forward that one, please. Also, all right, so here we're just showing, and again, I apologize for not having the data for Canada or Puerto Rico, but we're showing in the Virgin Islands, but we're showing where the number of cases are and the number of farms. So just to see how much overlap there is. And by and large, most of the cases, as you know, are concentrated in the metro areas, specifically around New York. This is as of May 19 in the reddish map. And most of the farms are further away. So they're more in the rural areas. So there's less of an impact immediately on farms as such. If you could advance it, please. But if we look at farms with direct sales to consumers and also with agritourism, so on the left we have agritourism, and the bigger the circle, the larger the number of farms offering agritourism. And on the right, it's the direct sales to consumer farms. You can see there's more of an overlap with the COVID cases, and that's logical to the extent that these farmers are near consumers, right? They offer the agritourism, people don't want to travel endlessly, and they also, the direct sales to consumers, people don't want to travel endlessly to get those either. So there's more of a concern here in terms of the farms that are providing direct sales or contact with consumers, that they're going to be more exposed to the disease simply because of where they are located, and it's the nature of their business. All right, if you could advance, please, one more. So another concern has been, especially for our dean here in the College of Ag Sciences, is, and you've heard about the meat processing plants shutting down across the country because the workers are infected. And here, just as an example, is slaughtering establishments, except poultry. And you can see where they are located. The graph on the left just tells you the number of establishments. The graph on the right tells you the number of employees, right? And the pattern here is that you have many, many establishments, especially around New York City, but they are very small, okay? Because the circles on the left are big, but the circles on the right are small around New York City and also Boston. So that's kind of the pattern here. If we could advance to the next slide, in contrast to the slaughtering, if we look at the meat processing from carcass establishments, a different process, it's the other way around. We have a few very large establishments with many employees in the New York City area, as you can see. So there's not many establishments, but there are many employees. So this is a concern, because if you have one worker who's ill in the given plant, that worker can transmit the disease. It's almost better to have many plants and fewer workers than it is to have few plants and many workers, and that, right? And that makes sense because, but the industry has consolidated so much over time that we now tend to have more, especially in the Midwest, we tend to have more very large firms with few employees. Sorry, very large firms with many employees, but we have few firms. So if one shuts down, then 5, 10, 15% of the food supply in a particular commodity could be affected. All right, so, and if you could advance one more, please. And I'm almost wrapping up here. This is my last one. Yeah. So this is also vegetables production. We know that with meat processing, we've fallen a bit behind the curve because we're caught blindsided in a way with the disease spread. But with vegetables and fruits, the harvest season is just about to start. So what we're hoping is to anticipate better where are the problem areas and can we help the fruit and vegetable producers and processors avoid some of the problems that we've seen in the meat sector. So if you could advance one more, please, and I will wrap it up here. These are just some additional resources at our own center. We've done a series of issues briefs, and then also this RRDC info is a collecting site for all of our colleagues. So thank you very much. I'm happy to answer a question now or a little later.
Well, thank you very much, Dr. Goetz. That was fascinating. I'm sort of horrified that Americans spend more money at restaurants than they do at grocery stores, but it's interesting. Why don't we wait till the end and take questions for any of our guests today at that time? Our next guest, now where did he go? Oh, there he is, John Newton. There you are. Okay, John, thank you so much for joining us. Really appreciate you coming to be with us today. And John is the chief economist at the American Farm Bureau Federation. Thank you so much.
Thank you. Thanks for the opportunity to join you all this holiday weekend. If I can, I'm going to try to share my slides here. Could I be enabled a co-host, Ms. Tara? And I've also emailed my slides to Tara in case she needs to advance them there. Okay, I'm now co-host.
Yeah, and I'm hoping that all of these slides can be shared on the CSG website. I hope that's okay.
Oh, without a doubt. Can you see my slides now?
I can.
Yes.
Yay.
Oh, yay! There we go. So just for some background, I think that we started our outreach to folks on Capitol Hill, to the Department of Agriculture, to the White House almost immediately. We closed our office in Washington, D.C. on March 13th. The stay-at-home orders were almost immediately issued, and that next week we began convening meetings, virtual meetings with our State Farm Bureau staff and state presidents across the country. They happen 3 times a week or more if needed, and just identifying issues that were emerging throughout this pandemic. And I think the very first thing that we noticed with the embassies, the Mexican embassy, other embassies, halting visa applications and halting H-2A guest worker applications, we immediately went to work, worked with the Secretary of State to get a fix there so that farmers had access to the labor that they needed to either harvest their winter fruits and vegetables or put the spring crops in the ground. So that was the very first thing that happened. And then since that point in time, it almost feels like issues emerge by the hour instead of by the week or month. And so we continue to be very, very engaged on this. My boss, American Farm Bureau President Zippy Duvall, actually flew in from Georgia to D.C. On Tuesday and was at the White House with the president when they announced details of the relief package for farmers and ranchers. But we were very involved in the the crafting of the relief package that just went out. Continue to be very involved on lobbying for fixes to the Paycheck Protection Program, as well as working with our Senate colleagues to get a COVID-4 assistance package, which we expect sometime in June or July. I know the Republicans at this point want to see how the $2 trillion stimulus package helps the economy as states begin to reopen. But many of the Republicans that we talked to, and the Democrats, quite frankly, when you look at the HEROES Act that was passed, I guess 2 weeks ago on Friday, continue to recognize that agriculture needs assistance. And we started this year very, very optimistic. When you think about the trade deals that we had put in place, whether it's the U.S.-Japan agreement, the phase 1 deal with China, or ratification of the USMCA, farmers were optimistic that demand was going to return and we'd finally see higher prices. I think the dairy industry has been especially hard hit, with 5 years of low milk prices. Many of the grain guys were excited to see the Chinese market return. But I think what we've seen is since the coronavirus, that represents a pretty significant demand shock to the farm economy, and we were just starting to recover from the 2 years of trade war related demand shocks. We see here this is the coronavirus confirmed cases from Johns Hopkins. We continue to see peaks and troughs in new confirmed cases. I think as Professor Gantz acknowledged, we are starting to come down on that curve, and I think it's important. We've stressed to the president that as states start to reopen, it's important that we still practice safe social distancing, still utilize personal protective equipment, make sure that stuff's available in our food processing facilities so that we keep the supply chain moving, keep products moving. As the professor mentioned, more than 50% of our food was consumed outside of home. We spent $1.7 trillion on food in 2018. And again, more than half of that was consumed outside the home. And so one of the things we observed is as soon as the stay-at-home orders went in place, it immediately disrupted the supply chain. And so I was on the phone with our Idaho producers last week, week before, and the food distribution companies that would buy for French fry deliveries, they canceled all their orders. So now all these Idaho producers have potatoes with no homes. And you can build a case like that across every single commodity where producers lost a market entirely that they were delivering to. The dairy industry saw export sales canceled. Farmers were dumping milk across the country because they lost homes for their products. We had producers plowing under fruits and vegetables because, again, they had no buyers for the products that they received. So we sent a letter to the secretary probably late March, identifying that these producers needed some direct financial assistance. And then we also highlighted the need for some food purchasing and distribution programs so that we could keep the supply chain moving. But quite frankly, some of these processing plants weren't fabricated to send product into the retail channel to the grocery store. And so we had some plants running at less than full capacity. We also began in talking with many of the big food companies, workers started not showing up for work out of fear of getting infected. And so plants started running at less than full capacity because, workers, whether it be for their own safety or the safety of family members that they have at home, weren't showing up. So I think when we talked to Tyson's, they were at that point running about 80% capacity just on workers not showing up, and they had yet to close any plants. We saw the panic buying hit in March. Americans, the shift in consumption, Americans spent $73 billion on food at grocery stores. That's a record. In April, it fell to $63 billion, but still very, very strong. But on the other hand, sales from restaurants fell by nearly 50% from February of 2020. Restaurants, many weren't fully closed. They were still doing delivery things of that nature. But it was a very, very steep decline in food going to the restaurant channel. And that had an impact on commodity availability, prices, et cetera. We also saw a big slip in in-store purchases of clothing items, fell by nearly 90% in April from prior to the coronavirus. So that's going to impact demand for clothing products, which ultimately impacts demand for cotton. And so we saw buyers overseas, as their factories were shuttered, canceling orders for cotton. That led to large declines in the value of cotton. So we asked for some assistance to the cotton industry and to the textile makers. The other challenge that began to emerge is with stay-at-home orders. The gasoline industry, fuel demand fell sharply. A, we had a Russia-Saudi oil war going on, and then B, people weren't driving. So oil inventory skyrocketed. We saw last month the May oil futures contract moved into negative territory because of the lack of adequate storage capacity for oil. But what that did for the agricultural sector, and it's not as big of an issue in the Northeast, but certainly in the Midwest, all the ethanol biofuel processing plants, their profit margins went negative. And so they began to idle their capacity, turn plants off around the country. And ethanol uses about 30 to 40% of the corn produced in the United States. So when you close these ethanol plants, all of a sudden the demand for corn falls dramatically, and corn prices across the Midwest fell by more than $1 per bushel. So you had an impact on all of our livestock and protein products. We had an impact on cotton. We had an impact on corn. The commodities that were probably less impacted are going to be things that are in the center of the grocery store. So your rice, your wheats, eggs saw higher prices, but just about everything else saw low prices because of the issues around the coronavirus. Once the coronavirus started hitting the meat packing plants and they were closing these plants, we saw meat processing fall dramatically. Pork processing fell by nearly 50%. Cattle processing fell by 40% because you had more animals that wanted to get into these channels that couldn't because the plants were open. As a direct result of that, cash prices to farmers for their animals fell dramatically. And we had some producers that had to depopulate because they had market-ready hogs or their poultry was ready to go, and there wasn't processing capacity available. So we had whole barns of chickens, especially in the Northeast, depopulated. Delaware, for example, I think they had a large chicken processor shut down. Pork, hogs were getting depopulated across the country because they didn't have processing capacity. Most of the cattle, we didn't have this same issue. The cattle can be put on pasture or put on a maintenance diet for a longer period of time. So we didn't see the cattle producers have to euthanize animals like we saw in the hog and poultry markets. We continued to see milk being dumped, but I think as Agrimark indicated, most of the co-ops around the country, the dairy co-ops, began to institute their own type of supply management program to quickly adjust the supply of milk across the country. This shows the various commodity prices and how they've been impacted since the beginning of the year. You can see that around mid-March, we really saw, especially our livestock products, deteriorate in value. At one point in time, hogs were down more than 50%. Cattle were down more than 30%. Corn's down 20%. Cotton was down more than 30%. But interestingly enough, things in the center of the grocery store had more stability. Rice prices were up 20%. Wheat's been pretty stable. Sugar, we've got a domestic supply management system in the sugar industry. Those prices have been stable. And then the food box program, the demand for cheese, as was indicated earlier, cheese prices they fell sharply and then they've risen sharply. And we now see the class 3 milk prices virtually unchanged from where it was in the beginning of the year. So this is the June class 3 milk futures contract. What the Congress did to provide some support to agriculture, we had a $2 trillion CARES Act. $50 billion of that went to agriculture. Half of that was in food assistance programs, the other half in direct payments to producers. The Office of the Secretary got $9.5 billion. and the Commodity Credit Corporation got $14 billion. The $14 billion is not available till July, but the Secretary used the $9.5 billion as well as $6.5 billion that he had to craft a $16 billion support package, and the details of that were announced this week. Row crop producers are going to be eligible for a payment per unit. So, for example, the average payment for corn is about 33.5 cents per bushel that was sold during this time period. Soybeans, nearly 50 cents per bushel that was sold during this time period. Most of the major row crops are going to receive some form of assistance. The livestock is going to be eligible for assistance based on per animal sold during the COVID pandemic. So from January 15th through April 15th, any livestock that was sold will be eligible. If it's a dairy cow that was sold for slaughter, they'll be eligible for a $214 per head payment if they meet certain weight requirements. And then dairy farmers will be eligible for a $6.20 payment per hundredweight for any milk that was produced during the first quarter of 2020. There's a payment limitation in this program of $250,000 per operation, or $750,000 per corporation. Farmers will be able to sign up for this on Tuesday, and the Secretary anticipates getting payments out to producers in 7 to 10 days. So this money will start flowing out across the country to producers. The biggest beneficiaries are going to be cattle producers, about $4.4 billion, dairy at $3 billion, specialty crops 2.3, hogs and pigs $2 billion, and then you can see the breakdown for corn, soybeans, cotton, and some of our non-specialty crops. 80% of the money is going to go out the door right away. Again, about $16 billion in support to farmers. We also saw the food box program where $1.2 billion was awarded to companies 2 weeks ago to start prepping these food boxes and delivering them to food banks. A big winner, and that's going to be dairy products with over $300 million for either cheeses and fluid milk products to go into those food boxes. Fruits and vegetables will go in those boxes, as well as pre-cooked meats, pork and chicken. So that's helped to keep the supply chain moving, and it's really helped to lift the cheese prices. The concern I have moving forward is, we talk about, how agriculture's been impacted, but, for many of our small to medium-sized farm operations, which are there are quite a few of them in the Northeast, is many folks likely rely on off-farm sources of income. And with unemployment reaching 15% in April, the Congressional Research Service, Congressional Budget Office, projects unemployment to remain around 9% going into 2021. That's going to impact off-farm income. And when you talk to the farm lenders, they look back at the recession of 2009 and look at what that did to farm loan delinquencies. When people lost money, they had their off-farm income take a hit. That's their big concern now is if people are laid off, if their off-farm income is not as high, are they going to have challenges servicing what amounts to be a record amount of debt across the country. And you can see here what farm loan delinquencies did the last time we had really high unemployment. So many farmers, many of our members, they have one or two off-farm jobs. The husband and the wife, or the wife and the husband, are working off the farm. I wish I could see all you all in public and you understand the joke, but they work to support their farming habit. And so that's my concern, is with the high level of unemployment we have, what are the longer term implications of this? And that's why we've been advocating so hard to get assistance out to producers. I estimate the damage of this year alone at close to $50 billion, and we've only received about $16 billion in support. So we're continuing to work with the Senate to get another aid package out there. We know that not only the old crop, but the new crop's been damaged. The hit to our livestock producers is significant. And then the other point to make, and it's not a popular point to make in parts of the country, is when we talk to the secretary and you say, you want to save agriculture. And he said, well, because we were talking to him, I think about 3 weeks ago, and he said, look, I recognize.
I'm not sure I understand.
Sorry about that. He said, I recognize that if you want to save the airline industry, you're going to have to give more money to the Boeings or the American Airlines and the United, et cetera. And we said, if you're going to save agriculture, you have to recognize that probably 20% of producers produce 80% of the food. Payment limits of $125,000 per farm is not going to bridge the gap for agriculture. And he recognizes that, and that's why more assistance is probably going to be needed. That's why they raised the payment limit to as much as $750,000 for an operation. We need access to credit, anything that we can do to bridge the gap, not only for our producers, but our agribusiness partners as well. Keep the dairy plants open. We've lobbied to get non-recourse loans. We've lobbied to keep our ethanol plants going. We've lobbied to keep our textile plants going. And so we continue to work and look forward to working with the Senate on the next aid package. And, with that, I'll be happy to answer any questions, and I appreciate the opportunity to visit with you all.
Great. Dr. Newton, thank you so much. I'm wondering, that there was a lot of information there. Thank you. That was excellent. And I'm looking forward to having those slides loaded up onto the CSG website. I'm wondering if anyone has questions. Please raise your little blue hands if you do for John, Stephen, or Catherine. Am I seeing any? Okay, there's a real hand. Ron?
I will add one more thing real quick.
Oh, sure.
When I was younger coming up, I came up to Vermont, and Bob Wellington, and I heard you all talking about him earlier, he showed me around, and we went to Cabot. We had such a great time working on the 14th Farm Bill. He was an excellent guy to work with. And I got back home. I was a professor at the University of Illinois at the time. And I got back home, and it wasn't a week later, I got about 20 pounds of cheese from Cabot. So you guys are fantastic. I still haven't lost the weight. I put it on, 4 or 5 years ago, and I'm still working to lose those pounds. But that Cabot old school cheddar is probably one of my favorite cheeses of all time. So I really enjoy my time when I get to come up there, and Vermont Farm Bureau President, Mr. Tisber, also showed me a good time when I was up there as well. So
I'm glad to hear that. I have to confess, Cabot and Grafton's in my district, so I have to be careful here, but Cabot's sort of a go-to cheese here, and it's wonderful. Actually, we know that the cheesemakers have really been suffering, so I did my part by ordering a box from Jasper Hill, and I'm still having a hard time fitting into my pants, so it's like, I'm in trouble. All right, thanks, John. We really appreciate the compliments. And anytime you're in Vermont, please look me up. All of my contact information is on the website. You can get it through Tara or Bob too. So Ron, do you want to unmute yourself and ask your question? And then I see Ms. Kinney, the Kinney family has her hand up as well.
Yes, please. I don't know if this is for John Newton or Dr. Goetz. The poultry industry is really, I'm in the southern part of Delaware, which is poultry industry is really large here. We've been hit pretty hard, and some of the original funding didn't have much in for poultry. Can either one of you talk about that a little bit more?
I'd be happy to. So we had a call with Undersecretary Northey on Wednesday. And actually when Zippy Duvall, AFBF president, he's a poultry producer in Georgia. So I think he has 5 chicken houses, and he pulled the secretary aside and said, look, there's nothing for poultry in this assistance package. And the secretary acknowledged that. And when we spoke to Undersecretary Northey, I think what they're trying to do is they want groups to work with them and show them their damage estimates. So there's a lot of folks that were left out here. Apple growers were left out. So if you can put together an estimate to show that your commodity's been impacted by 5% or more, there's a notice of funds availability that folks will be able to fill out with their FSA office to try to get some assistance. The challenge with poultry, they can't, if anybody's a contract grower, they're not going to be eligible for support. But if you're an independent producer and you can show that you've been impacted, I think they want to help people. And Undersecretary Northey said, look, we want to know where all the holes are. So if there's any holes at all, let us know. We'll try to figure out how we can get some help to those particular producers. Many of our Southern Farm Bureaus have conducted a research study with some of the land grants on the impact to the poultry business, poultry industry. And that study is being completed, but we're also waiting on the National Chicken Council to do their estimate of damages to the industry. And I think, we'll kind of release our studies together. But so that's the state of play right now with poultry. And given that President Duvall is a poultry producer, I've got somebody in my ear constantly talking about why we need to get support to these folks.
Great, thank you. Our Secretary Scoos, Michael Scoos, is Delaware Ag Secretary, and he was at the federal level for a while, so he's got a good connection with Secretary Perdue. So we'll continue from Delaware to get information back out about our concerns. The processing plants got hit similar to the meat processing. They got hit with some sickness, and then there's a fear to go there. So the production lines got cut down. Then we had to euthanize birds. They stopped. They started breaking eggs, but now that's started to settle down at this point. And so we're hoping to. And I heard talk to one of my fellow legislators today who has a poultry farm, and they're bringing a second line on with Purdue soon. So that's a good sign. But it's been a hard hit here. And so anyway, thank you.
Thanks, Ron. Mary Ann, you're up next.
Thank you, Carolyn. I'm curious as to if anyone's heard much about many dairy farms that are going out. I know here in Maine, we've had some that have left. We had one, we supply bedding to a lot of dairy farms in the state of Maine. Myself personally, our farm does that. And we went to one farm just this past week that had just sold their cows. So we're down another. We don't have dairy farms to spare here in Maine anymore, but hopefully these cows did go to another dairy farm, but I'm not 100% sure where they went just yet. Just wondering what we're seeing for impact there as far as in our smaller states, in our New England states, especially where we are smaller and don't have the land base to keep these farms going as well. Wondering what we're seeing as an impact overall with the reduction in the production that they're being asked to reduce their production. Is this going to be the end of the dairy industry in northern New England or the northeast part of the country?
Catherine, do you want to take a stab at that?
So, I can give you a rough estimate. So we need to remember that where we are, we're in May now. So the true impacts were not really felt until April. And, some of the production controls are not going to be put into place until May. So I think that it's a little premature to really know what the impact is. Our estimate at Agrimark, typically in any given year, we lose about 60 to 70 farms. And that's, our normal attrition rate based off of folks retiring and things along those lines. We are estimating probably more like 100 to 150 are going to be lost this year because of this concern. So it is alarming. One thing that our board has decided, I talked about when we put into place our new supply control that began the first of this month. One provision that we put in place there was that, and we've never done this before, is that we will allow folks exiting the business to transfer 50% of their production to another existing Agrimark dairy farm. And, we did that because for a number of reasons, but we felt it was very important to give people a way to exit with a little more dignity. I mean, you can't sell your cows right now for a very, very good price. It's a rough situation to be in. So this gives you some value to your animals and will allow you to remain on your farm. Our previous policy was if you wanted to transfer that production, you had to purchase that entire farm. So I think this is going to be a really nice thing for our cooperative in the short term to make sure we maintain some of that production. It gives folks the opportunity that had some struggles with our original production plan, those that were in the midst of an expansion, for example, that were denied that. It gives them an opportunity to be in a better position. So that I think will be really helpful. It's only been, you know, a few days at this point in time, but we've already seen at least 10 or so requests for that. In terms of the end of the industry for the Northeast, I do not think that that is the case at all. This will be a struggle for sure. And as I alluded to it in my beginning remarks, the fact that this took place after those 5 years of depressed prices makes it extra challenging. But think about those farms and businesses that are still in operation after 5 years of low milk prices. This is really the cream of the crop. These are fantastic businesses operating in the Northeast. And if they can survive that struggle, there are very many that are gonna survive this one. So, and, you know, as I talked about, what we're doing at the cooperative level to, you know, make sure that we are more able to react to the marketplace, I think is, at the end of the day, is going to be the silver lining and put us in a much better position moving forward. So there will be casualties and it will be bloody and nasty for a while, but at the end of the day, I think we're going to come out much stronger. And I think, at least in Agrimark, we feel really good about where we're headed.
Thank you, Catherine. We have about 1 minute left. Does anyone else have a question that we can squeeze in here?
May I add one thing to Catherine's remarks?
Sure, absolutely.
We lost the most number of dairy farms in a year in 2019 relative to what we've seen in the past. Farm Bureau built a new insurance product. It's called Dairy Revenue Protection Insurance. If you are talking to dairy farmers, now's the time with these class 3 milk prices shooting up. Now's the time to put risk management in place. President Duvall and I had a visit with the Maine dairy industry a couple weeks ago. We talked to them about the value of this insurance product, and they can buy it. They don't have to pay for it right away. The premium's not due till after the fact. So that's one thing that they can do to manage their risk. And then the other thing, Dean Foods, everybody knows about Dean Foods bankruptcy and the DFA acquisition. Dean Foods did not pay for their April milk to producers. So if there's any independent producers in your states that were shipping to Dean Foods, they just lost their whole April milk check. Any bills that they were about to pay, their checks are probably getting bounced because Dean Foods didn't pay for their April milk. So we're going to send a letter to the Dean Foods estate to try to prioritize and get that money to those producers. But there's a very high likelihood without some intervention that these producers are going to get paid pennies on the dollar for the milk they ship to Dean's in April. So just wanted to raise that flag for you all.
Yeah, thanks, John. That's not good news.
Nope.
All right, I think we are just about out of time. I want to thank our guests, Stephan Goetz, Catherine Ronde, and John Newton for joining us today. We really appreciate it. I want to thank my co-chair, Judy, for being here, and everyone, Tara and Bob, for setting this up. We really appreciate it. I think we've had some really good information here, and I appreciate your attendance as well. So thank you very much. And I think we'll be done.
Thank you too. Have a good weekend.
Yeah.
Thank you so
Happy
much.
Memorial Day.
Yeah.
Happy Memorial Day, everyone.
Everyone.
Thank you.
Too. Bye.